talking about defense sector and especially the funds that are being launched based on this particular sector and the kind of run-up it has already showed and the future outlook. And although this is a very sector-specific conversation that we'll be having, but then in the second half of the show, we will also get your mutual fund portfolio queries answered by our experts. So just in case you're watching the show live today, you just need to send across your questions on our WhatsApp number, which is 865-797-4571. You can also email us your questions on the Money Show at etnow.tv. All right, so let's begin the show. The defense theme has delivered an impressive 200% return in the past 12 months, outperforming all the other sectors and benchmark indices. Now, according to a Nomura report on the sector, over the past 10 years, India's defense spending has increased at 10% compared to the global average of 3%. The government is definitely supporting the sector through policies, reforms, and an increase in defense capex every year. India's defense exports have shot up from almost 686 crores in 2013-14 to 21,083 crores this year. And with all of this under consideration, Motilal Oswal Nifty Defense Fund has also raised 1,676 crores in the NFO that ended on 27th June. And it is also the highest ever collection by any equity index fund. And this happens to be India's first defense index fund also. So let's talk more on this. And I have with me Pratik Oswal, Chief of Business Passive Funds, Motilal Oswal AMC. And Pratik, thank you so much for joining on the Money Show. And congratulations for you. Congratulations to you for the bumper collection that you have actually raised through Motilal Oswal Nifty India Index Fund 1676, roughly around 1,800 crore it seems you've collected. Although such a response was definitely expected, but then according to you, what would have been the reason behind such stupendous response, considering the sector and the theme has already played out very well in the past? So what's the trigger according to you?
Yeah, thanks, Kavita. Thanks for having me on the show. So the response has been better, much better than what we expected, I would say. We have been getting a lot of requests from a lot of our clients over the last few months that they would like to invest in such a fund, and that's why we sort of went ahead and launched it. And we obviously expected some sort of demand coming in because defense stocks have been in the news, and people are looking to buy this theme in a very big way. In fact, even at Motilal Oswal Asset Management Company, we have been very long-term bullish on this sector. A lot of these stocks that you see in this index fund that we launched are already owned by some of our active funds. So we believe there's a lot of long-term opportunity in this sector, which is why we went ahead and sort of launched our fund. And we believe that there is a lot of interest for investors, who are looking to sort of take a slightly less risky option than buying stocks directly. So a lot of investors are looking at buying defense stocks, but they don't know what to buy, what is the right stock, which is not the right stock, which is long-term outcome. So the defense index fund really simplifies the entire process of stock selection by buying the entire market through an index fund. We also believe that an index strategy is actually a good way to play this sector because the number of stocks in this sector are very limited, about 15 stocks. So it's very hard for anyone to do some major stock picking in this sector. So we believe that having a simple low-cost index fund really makes life easy for anyone looking to play this.
So Pratik, talking about the response going ahead, now I also want to understand, since we've seen a stupendous run-up, even stock-specific run-up, we talk about good amount of returns, 200 to 50% returns we've seen. But then I want to understand from you, is there still room left for this growth to go ahead? Do you think the valuations are really attractive, or there is still some leg room left even from the valuation front?
So, honestly, we believe that this sector is quite richly valued. And, we've obviously, made it very clear to a lot of our investors that this may not be a very suitable short-term bet. Investors looking at a 5 to 7 year opportunity will be able to benefit the most from this sort of a fund. It is a thematic, it is a sector fund. So it is, something that, I think investors should look at from a risk lens as well. And we believe that an aggressive investor who has the appetite to take over volatility, is ideally suited for this sort of a fund. Having said that, as you said, the budget is very close. And one reason to why, we launched this fund right after the elections is because we wanted to be crystal clear about the way forward for this sector. And what we've seen is that the communication, that's coming in from the various ministries has been quite consistent. I think they have clearly mentioned that this has been a big focus and will also become probably even bigger focus going forward in the next 4 to 5 years time. In fact, there's a lot of the ministers have also commented that exports is a big opportunity in the space, and they expect exports to be upwards of 50,000 crore in the next 4 to 5 years time. So there are a lot of long-term growth levers in this sector, which is why you're seeing stock prices moving the way they are. And we believe that there may or may not be anything left on the upside in the short term, but it's definitely something on the long term where we feel there is a good value.
All right, so overall, everything looks very bullish for this sector as of now, but I then want to understand or question you, why a passive approach and why not an active fund?
Yeah, so as I mentioned, we believe that so manufacturing as a theme, we believe is going to be a very large theme in India. If you look at India's exports, pharma and IT are two big exports, but we believe over the next decade, manufacturing as a theme is going to be up there. And within manufacturing, I think defense is one such sector which or theme which will play out in a very big way. Currently, if you had to really invest in defense, there's not many avenues. Even if you look at the exposure of defense stocks in the Nifty 50 or Nifty 500 is quite less. So I think the fund route makes sense for anyone looking at playing this theme over the long term. Passive makes sense because there's very few stocks in the portfolio. Currently, our defense index fund that we've launched has about 15 stocks in the portfolio, and we hope that more stocks fit in over the next 4 to 5 years time. And even within the 15 stocks, there's only, I think, 2 or 3 large cap names. There's maybe 1 or 2 mid cap names, and the rest are all small cap names. So it's very top heavy. Top 5 companies are, I think, 70-75% of the index. So it is a fairly concentrated universe of stocks, very less number of securities. And we believe that stock picking becomes extremely tough in this sort of an environment where there's not much option. So a passive makes it a lot easier. You don't have to worry about underperformance, outperformance. You don't have to worry about cost. You can just simply pay the theme in a very low cost way.
Pratik, now, having said that, it is still a sectoral exposure that one might get in their portfolio, and every sectoral exposure comes with a risk. I want you to explain our viewers what could be the risk involved in having not only a sector allocation, but also a different sector allocation in their portfolio.
Yeah, so there are several risks involved. I think, again, we believe that this sector as a whole is very long-term positive, but honestly, looking at the valuations where they are, looking at how the market has reacted over the last 3-4 years, we believe that this is an excellent investment for anyone looking at the long term. We also believe that investors should not be really that I would say get affected by the short-term past performance. This sector has done crazily well in the last 3-4 years, and investors should not really have the expectations of this replicating over the next few years. I think the expectations going forward should be a lot more tapered. That's very strong. And thirdly, I think we believe that this sector will come with a lot of volatility. So investors who are conservative, who are not able to take volatility, not able to I think handle volatility during drawdowns, should probably stay away from this fund. And lastly, also the size of the investment. We believe that if you look at a portfolio of, say, I don't know, maybe 1 lakh or 10 lakh rupees, ideally, 70-80% of the portfolio should be towards something like a flexi cap, multi cap, sort of a thing. But the balance, maybe 15-20 should be in ideas like defense. So we believe that it should not be a large part of your portfolio. You should not invest disproportionately of your portfolio into themes like defense and others. So I think that these are some of the risks that are involved from a personal finance perspective. From a defense perspective, we believe that this sector has multiple growth legs. There is exports, there is import substitution, there is the budget which keeps on increasing by 10% every year. And obviously, and the order book is also extremely strong for most of these companies. In fact, demand is not the problem. The problem is supply. So we would say the biggest risk in this sector is going to be delivering on the expectations that investors have today. which are fairly high. We would say that order book towards profit and loss requires capacity expansion, investing in I would say manufacturing capabilities. So I think that is something which we need to watch out for. If companies are not able to grow or expand their manufacturing abilities over the next few years, then obviously you could see a downside. But I would say that execution is the biggest risk because order books are very strong, and even the sort of profitability in which these companies are operating is very strong. So I think these are some of the risk factors from a industry perspective.
All right. So even though you mentioned about returns and the overall movement of the sector, getting subdued maybe in the near future, but then having said that, what should be an ideal return expectation from this particular investment via mutual fund? Because we've already seen individual stocks running up. Now, looking at that run up, should you be expecting the same kind of expectation even via having a mutual fund exposure in this sector?
Yeah, so past return is something which investors should not really take very seriously. I think a past return is just an indicator that there is some momentum that's happening in the sector, and the fact that investors have sort of expecting big things in the sector. Current valuations are quite high, so we would obviously maybe and we have sort of been very consistent with the communication saying that future expectations may not be as high as what we've seen in the past. I think we've seen about 30, 40, 50% outperformance over broad-based indexes, something which no one should really expect from any sector. Having said that, for anyone looking at this from a 5-year perspective, plus, I think from that perspective, I think some outperformance over broad-based indexes can be expected, maybe 3, maybe 5%. But anything beyond that is coming into the luck category. So we believe that yes, for the amount of risk that you're taking by investing in a sectoral fund, by thematic fund, there should be expectations of some sort of outperformance, which we believe, in terms of at least our analysis, it may happen based on the sector's performance. But yes, look, investors should not be faced by sort of high returns that have happened in the sector in the last 3 years.
All right, Pratik, before I let you go, I really want to know your budget expectations, and not only as an AMC head, but even as a taxpayer, what would be your demand from the finance minister for this budget?
Yeah, so, I think the budget is obviously around the corner, and I think we had an interim budget last year, so it wasn't really a proper budget. But I think this year will be a proper budget, and it will be a good budget to set the tone for the next 3 to 4 years' time. So we do believe that this budget is going to be quite important for the investment community, and we believe that although historically budgets have been overhyped, and there hasn't been a lot of correlation between equity market performance post and pre-budget. However, investors are sort of pricing it in. We believe that, honestly, even after having a sort of coalition, sort of a government that's come in, the sort of communication and the sort of consistency that we've seen in the past will probably continue in the future. Coming to the defense side, historically what we've seen is that our budget has increased by about 10% every year. From I think currently it's about 5 to 5.5 lakh crore, which we believe to continue. It may even increase from there going forward. So I think that's the expectation that we're having from this budget. It's already a big item. It's about 13% of our overall yearly budget, which is only invested in defense. So I think we expect the same things to continue in going forward, and that's the expectation that investors also have.
All right, all points noted, and with that.
If you like this video, then like, share and subscribe to ET Now.